Oracles. Today we're going to go over all the dividend announcements and changes, or at least the ones that were important to me, that we had seen last week. So, of course, I can't say these are the ones that are coming this week. I could go over that, but I'm going to give you guys the numbers that were actually released last week as far as did they stay the same? Did they go up? Did they go down? And so I'll share those with you guys today. So this is my first time kind of doing this. So if you guys have any feedback on how you want me to do it, any other information you want me to present, please let me know in the comments below. I'm just going to kind of give you guys a list of what has come out over the last week, kind of some implications behind them, just some of my thoughts behind it as well. And before we jump into this, please just make sure to hit that like button down below, subscribe to the channel. I appreciate all the support you guys have given me. So let's keep that on going forward. All right, so first on the list, I'm going to go over the ones that I do not own first. So the ones that I do not own, we've got Nextera Energy, that is stock symbol NEE, and that is coming in at a 51.5-cent dividend. Now, energy is going to be a huge play, especially if we're going to get into a potential recession. Now, me personally, I own Hess Midstream. That's HESM. Love that one. There's ET, which I had for a long time. There's EPD, which is another great one out there as well. Those there are great. Now, I chose HESM because there's extra tax filing paperwork that you have to do for ET and EPD. And I just didn't want to have to do that. I didn't want to have to take that, wait for that to come in, take it to my accountant. I was like, you know what? I'm happy with Hess Midstream. Don't need the other ones. Made good money on them. And I just decided to dispose of those and keep it more simple for myself. But if you don't care about the extra paperwork that you have to do, go ahead and grab those other ones because they have been very successful. Next on the list is one that I actually sold out of recently, and that is Bank of America, coming in at a 26-cent dividend. Now, for me, I sold out of it, and I had made a video discussing it previously that I sold out of Bank of America just because they were kind of at the point where they really were shrinking over time. They were losing customers. And it's not like there was a massive number, but the number has been shrinking over time. And Warren Buffett was selling out of it. Not to say that I should be following what Warren Buffett does or does not do. Plus, he's been in it for a much longer time and has significantly bigger profits than I do. But the fact that they're just kind of shrinking, and I liked SoFi Bank and I own JP Morgan, and I've got the three big credit card companies that are out there, or at least credit card processing companies, Visa, Amex, and MasterCard. I was like, you know what? I had enough exposure to financials that I didn't need to keep on Bank of America, and their dividend growth rate wasn't as big as the other ones, so I decided to get rid of them. But they still pay out a nice dividend and still have dividend growth, so they came in at the 26 cents. Next on the list is NNN. So this is a REIT coming in at 58 cents for a dividend. REITs are awesome. I love REITs, especially when it comes to just kind of providing that higher end income that's coming in. I don't drip that money back into those stocks and those REITs. I take that money and I put it into other plays that are out there. So I currently own Realty Income, I own Vici Properties, and I own Prologis, PLD. So I own those three, don't need NNN, but again, there's a lot of great options out there, and I think NNN is one of them. Next on the list is a huge value play tried and true by many dividend investors out there, Johnson & Johnson, coming in at $1.24 for their dividend announcement. And again, it's a lot, $1.24, but when you realize that they've been around and they've been increasing dividends for more than 50 years, you'll realize that, that's what happens. So when you look at some of these dividends that are out there now, like an NVIDIA or some of the other tech plays that just started announcing dividends, they're very small. And you're like, those aren't going to change the world. But imagine getting all of that growth and having that dividend grow over time to $1.24. That takes time. It's that compound growth over time. And those dividend growth rates are massive. And accumulating the stock shares now to be able to accumulate that growth over time is where you're really going to make that compounding even larger and faster as time goes on. So yes, Johnson & Johnson is a tribute to that. Getting into the stock now still could be worthwhile. It's a great company. They're continuing to grow. But for me, I decided there's other companies that I would rather get into than Johnson & Johnson. So I'm Procter & Gamble and some others like that. Next is Blackstone. They actually increased their dividend by 5% to 86 cents. I actually had bought into Blackstone a little while back, and then I decided to sell out of them. I was in it for a very short time. I was kind of over diversifying. I had too many stocks in my portfolio and just decided to trim that one right off because I didn't want to be in it anymore. So that one there, again, seeing an increase of anything that is going to be more than inflation, first off, is going to make sure that you're going to be, making more money and not losing money, because you want to make sure that you have an increase in your income that's more than inflation. And a 5% is pretty good because, again, I mentioned it the other day, most people's raises are about 3 to 5% on the higher end. So if you can outpace your own income raises when it comes to your job, then you're doing very well. 5% to me is not something wowing that's out there, but it's still a very nice increase. All right, so now onto the stocks that I currently own. Costco, they announced a $1.16 dividend. So Costco, I love. Costco has been going insane. Their valuation to some people seems to be very high. To me, it doesn't matter. I love Costco. I love their whole entire premise behind it. And they continue to increase dividends significantly. And on a regular basis, they will pay out a special dividend. Last year's special dividend was massive. So it's one of those things where, hey, you never know when you're going to get a really nice bonus coming out of Costco. So I continue to hold it and I continue to add to it. All right, so now for some of my ultra high yield dividends that are out there, and these fluctuate significantly. Now, these here are ones that I'm aware are going to have some massive NAV erosion over time. I'm using these strictly to bring in that income to be able to add higher dollar amounts to all of my other plays. That is what I'm using these for. I will add a little bit to it. I've changed my thesis a little bit. Come the first of the year, I'm just going to see how the economy is doing, but I'm probably going to just increase a little bit as time goes on. It's going to be a very, very small portion of my portfolio, but having that income coming in and trying to time things, I have been getting better and better at when it comes to finding a bottom for some of these and just kind of catching it in a swing. So I may swing in and out of these just to get that income coming in and not catch that NAV erosion as much. I'll keep you guys posted on my strategies with that. I was also talking to Darth Dividend out there. If any of you guys follow him, I'm going to have him back on the channel as well, and we're going to discuss that a little bit further also. But getting into all of these, so 3 of them pay on a weekly basis, 1 of them pays on a monthly basis. The monthly one is CONY, CONY. They went up on their dividend. Last month was $1.04. This month is $1.11. So again, this one fluctuates a lot. Back in the spring, it was pushing almost $3 per share on dividends. And that was wild because the stock price itself, or the ETF price itself, was up almost near $30. So CONY, I have made massive, massive money on. I am playing with the casino's money right now. I've more than doubled my money on this. So I don't mind letting this one ride and just bringing in all of that extra income, because every single penny that comes in is basically free money to me at this point. So I don't mind that. So even though the dividend has come down significantly, it is now climbing back up again and just kind of fluctuates as Coinbase fluctuates, which also fluctuates with the crypto market. Next on my list, sticking with the Yield Max funds, I've got YMAX. I chose YMAX because I do like a lot of the Yield Max funds, but a lot of them do have NAV erosion. Some of them do well, so I figured why not take one that encompasses all of them, kind of keeps it a little bit more balanced that's in there, and they now started paying weekly dividends. So their weekly dividend is down. It was down to 17 cents from 20 cents, but they just started paying weekly recently. So I'm going to kind of monitor this to make sure that that dividend doesn't keep on dropping as it is. I'm guessing that they're just trying to level things off. So I'm just waiting to see how that levels off from here. And then I will pay attention going forward to see if I'm going to add to it, if I'm going to drop it entirely, or what I want to do. And the next 2 are also weekly payouts. These are some Defiance ETFs. First one is WDTE. That one came down to 25 cents from 33 cents. And then QQQY came down to 28 cents from 34 cents. Again, these just started paying out weekly recently. So I'm going to monitor these as well just to make sure that, hey, the NAV erosion doesn't speed up even faster on these because they're paying out weekly. I just want to see how the fund managers are going to be operating with these paying out on a weekly basis. And again, based upon the way my portfolio is laid out, getting paid on a weekly basis is great because that means I have more cash flow coming in more regularly to be able to play around with my stock portfolio. So when I see there's opportunities, I have more cash flow readily available. Now, I do have a monster stockpile of cash as well. I've got almost 10% of my portfolio in cash. And I just switched over today to start working on step 10 of level 1. For those of you guys who don't know, based upon my entire portfolio, I've just set criteria for different categories in my portfolio, one of which is my cash, and I was at 9%. I've now pushed that to 10% cash. I want to keep myself at 10% cash, and I'm going to cap that out at 12.5% cash just to be ready for any opportunities that are out there. Because if I've got cash flow coming in, or if somebody cuts a dividend, like we have seen from some of these higher yielding plays, if that gets cut lower, I want to make sure I have enough cash to take advantage of opportunities. Because chances are, if those are getting cut, then we are going to be seeing good opportunities in the market. So I've got the cash that's out there. As the portfolio comes down in value, more cash will be readily available because that percentage will be a higher percentage. So portfolio comes down a significant amount, my portfolio cash goes up by a significant percentage. I will now have that cash available because my portfolio will say, hey, you now have 13% cash, whereas my goal is 10%. So now I can spend some of that money and my portfolio will tell me where to spend that. That's how it's all set up. So I've just switched over the cash portion of it to step 10. Once I get the cash portion to a minimum of 10%, which right now is going to be about another $600, once I get that in there, then I can flip all of the other categories over to step 10 as well and start adding back to my portfolio also. The way it's set up is designed specifically so that as the market is running up, I can catch some stocks and ETFs that are dipping individually because some things are going to keep on running. And hey, maybe I'll miss out on a little upside, but there's going to be opportunities in the market at all times. My portfolio will tell me when I have opportunities in the market based upon my portfolio and what is in there. So I can buy at those times. And I have been seeing it swing back and forth. For instance, when we had seen the interest rates going up, the REITs got beaten down. And I took an opportunity and bought a lot of those REITs because my portfolio said, hey, these are beaten down. So I bought a lot of them. Then, as soon as interest rates started getting cut, those took off and I no longer needed to add to them. But I saw some other categories starting to dip down. For instance, value plays had been doing very well with a lot of thoughts of, maybe a recession coming up. And then they started pulling back a little bit as those thoughts kind of dwindled and went to the wayside. So as they came back down, I saw that I can buy them and I bought into them. So it's really how this entire portfolio setup is just tells me what stocks are underperforming, what sectors are underperforming, and buy low. And then when it goes higher, I can hold. I'm not much of a seller on these, but if there are some things that I'm looking at and going, hey, you know what? Don't really need to be in them anymore. Maybe I want to consolidate. I can see what is higher on those areas and I can sell out of those or put in stop losses like I've done with Oracle. Gives me opportunities out there and I can see a lot of different things that are happening just based upon how my portfolio is moving and where I can add and where I'm kind of a little pushed higher. So to me, it just kind of lays out a beautiful picture for me to see where everything is going in the market. And I can see specifically with my own portfolio where to add, where to hold. So that's all I've got for you guys today. There's a bunch of dividends that were out there, and you guys can let me know in the comments below any other dividend announcements that were made last week. I will do this every single Monday for you guys, and I'll announce all the different ones that we had seen from the prior week. And again, the staples are going to be YMAX, WDTE, and QQQY for me. If you guys have any other weekly ones out there that you want me to announce and put in here, please let me know in the comments. I will absolutely do that. And again, these are things to monitor. I'm going to do this on a weekly basis because now I can track this going forward. I'm going to make a playlist just for these as well. So I can look historically and see how things have performed and see, hey, you know what? Maybe these things over time aren't doing as well as I thought, or maybe they're doing better than I thought. And we can see how their performance is. So that's all I've got for you guys today. Don't forget to hit that like button down below, subscribe to the channel. Thank you so much for watching. Have a great one.